Hello, good day traders. It's Wednesday, October 4th. This is Alan Hong, market analyst of GKFXPrime. So I'm gonna share my daily analysis through this video. And first of all, let's review the major market movements. So the first instrument we're referring here is the dollar index in 4-hourly chart. The US dollar index was fell against a basket of major currencies on Tuesday, down 0.07% to 93.41 as investors kept their powder dry amid a lack of top-tier economic data, but losses were capped by growing expectations that the Federal Reserve will hike its benchmark rate at year-end. So it was a quiet day on the economic calendars. The greenback was retreated from 6-week highs as investors held off initiating large positions ahead of a busy week, which includes a speech by the Federal Reserve Chair Janet Yellen slated for Wednesday. So Yellen will speak at the Community Banking in the 21st Century conference on Wednesday amid growing speculations concerning her positions as Federal Reserve Chair and Federal Reserve Governor Jerome Powell and former Federal Reserve Governor Kevin Walsh are reportedly on a short list of candidates to succeed Janet Yellen. So losses in the greenback, however, were capped as the investors remain optimism that the Federal Reserve will stick with its plans to hike rates in December. So according to the Federal Reserve Rate Monitor tool now, nearly 80% of traders expect the US Central Bank to hike rate in December compared to just 50% a month ago. A slump in the pound also supported the dollar upside amid data showing the UK construction sectors contracted for the first time since the immediate aftermath of the Brexit vote. So the headline reading on the markets, UK construction PMI was fell to 48.1 last month from 51.1 in August. And the Purchasing Manager Index figures are given as a number between 0 and 100. Anything above 50 signals growth, about anything below indicates a contractions in its activity. Well, the single currency was rebound with the pair EUR-USD gained 0.31% to 1.1767 as it continued to recover from losses posted after Catalan's vote for independence in a contested referendum on Sunday, which that ended in violence when police cracked down on polling booths, injuring hundreds of people. Meanwhile, the pound was remained lower with pair GBP-USD down 0.14% at 1.3258, which is the lowest level since September 14th, after data earlier showed that activity in the UK construction sector was contracted for the first time in 13 months in September. The Australian dollar was little changed on Tuesday with AUD-USD at 0.7823. So in a widely expected move, the Reserve Bank of Australia was held its benchmark interest rate at 1.5% at the conclusion of its monthly policy meeting on Tuesday. So commenting on the decisions, the central bank said economic growth was expected to pick up gradually in the coming years, but it warned against low wage growth and high household debt. Having attacked in commodities markets, the gold price was halted. Their recent slump on Tuesday rose $2.89 or 0.23% to trade at around $1,274.68 a troy ounce, after Treasury yields trimmed gains, pressuring the dollar to retreat from 6-week highs and lifting sentiment on the yellow metals. So gold prices will restrict to a narrow $7 trading range hovering above 7-week lows amid dollar weakness as investors awaited directions from the top-tier economic data and a speech from Federal Reserve Chair Janet Yellen later in the week. So gold prices have fallen to 3 straight weeks and show no signs of abating as data on Friday suggested that traders are losing faith in gold's upside potentials in the wake of renewed tax reform hopes and an expected year-end rate hike. So now net bullish bets on gold was fell to 212,600 according to a report from the Commodity Futures Trading Commissions on Friday. So gold price is sensitive to move higher in both bond yields and the US dollars. A stronger dollar makes gold more expensive for holders of foreign currencies, while a rise in US rates leave the opportunity cost of holding non-yielding assets such as bullion. As for the oil price, it was fell in Asia on Wednesday, down 0.73% to traded around $50.05 a barrel after US industry estimates on inventories came in mixed, and with the US benchmark edging towards $50 a barrel. So according to the American Petroleum Institute said on Tuesday, the US crude oil inventories fell by 4.08 million barrels last week, and this is far more than expected, while gasoline supplies gained 4.91 million barrels and distillates eased by 584,000 barrels. So official data from the Energy Information Administration is due on Wednesday, with crude oil inventories were seen down by 467,000 barrels, and the API and EIA figures often diverge. So overnight, crude prices settled lower on Tuesday as investors awaited weekly inventory data expected to show the crude oil supplies fell to a second straight week amid the concerns that the sharp uptick in the crude prices could encourage US shale producers to ramp up productions. A day after crude prices fell 3% following a Reuters survey indicating that OPEC ramped up output in September, and OPEC Secretary General Mohammed Bakindo attempted to ease concerns over falling compliance with the deal to curb output. Compliance with the oil output cut deal between OPEC and non-OPEC nations is extremely high, and OPEC Secretary General Mohammed Bakindo said on Tuesday. So investors, however, was weighed the bullish comments against expectations of an uptick in the US shale output as the rise in crude oil price above $50 barrels. So this has spurred the drilling activity. But however, the advance of autumn is traditionally associated with vehicle oil demand as it marks at the end of the summer driving seasons. So that trend, however, could be less prevalent this year as refineries are expected to replace lost supplies following earlier disruptions from Hurricanes Irma and Harvey. And now we're going to review the highlighted economy data that released on Tuesday as well as the today focused data and events. Alright, so yesterday it's Australia. The Reserve Bank of Australia was decide its latest interest rate decisions for October, and it was held at 1.5%. So besides that, during the European trading hours, the United Kingdom has released its constructions PMI, alright, the Purchasing Manager Index for the construction sectors for September, and it was slightly lower than previous 51. Okay, the result was at 48.1. And the last data yesterday is the API weekly crude stock, which show a decrease of 4.079 million. So as for today, during European trading hours, United Kingdom first will release the services PMI, alright, and it is expected to remain the same. So during the North American trading hours, United States are going to release a series of economic data, including ADP non-farm employment change, right, as well as the ISM non-manufacturing PMI. So the last data tonight will be the crude oil inventories from the Energy Information Administrations of the United States. So besides of the data, there are two important events that we should focus on it, which is the speeches that is going to deliver by the European Central Bank President Mario Draghi, as well as the Federal Reserve Chair Janet Yellen tonight. It's technical analysis now. So first instruments, we're referring to the Great British Pound against the US dollars pair in 4-hourly charts. So the sterling has remained lower and plunged to its lower levels since September 14th, after data earlier on Tuesday showed that activity in the UK construction sectors contracted for the first time in 13 months in September. So the pair GBP USD was hovering a tad above the Fibonacci retracement level of 50 or 1.322. So it is taken as the trend shifting threshold, and falling through this level will be a signal for shifting trend directions become downtrends. And the next support level we could refer to 1.312. So on the upside, the nearest resistance level can be seen at 1.331, while UK services PMI for September is due to release later today during European trading hours. So traders will watch this survey closely as purchasing managers usually have early access to data about their company's performance, which can be leading indicators of overall economic performance. The single currency was gained some ground as it continued to recover from losses posted after Catalans vote for independence in a contested referendum on Sunday that ended in violence when police cracked down on polling booths, injuring hundreds of peoples. So with the pair EUR-USD rebounds from recent low at 1.1696 and hovering below the resistance level of 1.178 now. So closure above this level will suggesting to retrace more and move higher towards the next resistance level at 1.184. As for the downside, only with a closure below 1.169 will open up a door for further bearish, and the next support level we could refer to 1.16. So Mario Draghi, President of European Central Banks, are due to deliver speeches later tonight, which highly anticipated to provide indications on the central bank's policy. The Kiwi held weaker despite the rebound from the recent low at 0.715. So the both moving average line in 4 hourly charts is remain expanding downwards. This was a signal to help its downtrend. So thus, closing below 0.714 is suggesting for continuation of downtrend and fall further towards the next support level at 0.71. So on the upside, the first resistance levels comes in at 0.721. The Australian dollar was later changed on Tuesday after a widely expected move by the Reserve Bank of Australia, which held its benchmark interest rates at 1.5% at the conclusion of its monetary policy meeting on Tuesday, while the pair AUD-USD rejected to fall below the support level of 0.782, signaled to move slightly higher in short terms, and closing below those levels only will open up a door for further retracements and fall further towards the next support level at 0.773. On the upside, we could refer the nearest resistance level at 0.793. While Australia is due to release a series of economic data on Thursday, including retail sales and trade balance for August. Additional with the speeches that going to be delivered by the Assistant Governor of Reserve Bank of Australia, the Belt, so the Aussie is anticipated to have higher volatility on Thursday. The safe haven Japanese yen was gained back some momentum and slightly stronger than the dollars on Tuesday. So with the pair USD-JPY retreated from recent high at 113.2 and currently hovering between the both moving average lines. So referring to the MACD indicator, both moving lines were pointing flat. Additional with the rate momentum, so the pair is suggested to be ranging between 111.9 and 113.2 in short term. Only with a closure above 113.3 will open up a door for further bullish, and we could refer the next resistance level at 114. On the downside, the first support level comes in at 111.8. Looking into commodities, the gold price halted their recent slumps on Tuesday after Treasury yields trimmed gains, pressuring the dollars to retreat from 6-week highs. So this was lifting the sentiment on the yellow metals. But however, following the previous closure below the Fibonacci retracement level of 50 or $1,280 a troy ounce, so it is suggested to shift its trend directions become downtrends. Thus closing below $1,262 a troy ounce of support level will lead it to fall further towards the next support level at $1,238. On the upside, the nearest resistance level can be seen at $1,280. So gold traders will focus on US data tonight for indications on the directions of the dollars. Gold price is sensitive to move higher in both bond yields and the US dollars. A stronger dollars makes gold more expensive for holders of foreign currencies, while a rise in the US rates leave the opportunity cost of holding non-yielding assets such as bullion. And the oil price was fell in Asia on Wednesday after US industry estimates on inventories came in mixed. So the West Texas Intermediate crude price continued its retracements and currently hovering at the support level of $50 a barrel. Falling below this level is suggesting for further downsides, and we could refer the next support level at the Fibonacci retracement level of 50 or $49.20 a barrel. On the upside, the first resistance level comes in at $51.10, while the official data from the Energy Information Administration is due on Wednesday, which anticipated to set short-term directions for oil price. To date, please don't forget to subscribe to our YouTube channel by clicking the GKFXPrime logo on the screens in order to follow our updated analysis and education video. Thank you for watching.
GKFX, your global trading partner.